Sound test. Hello everyone and welcome again to Let's Get Technical series. I am Kavita Agrawal, the founder of EXP-Invest, and we are here today to discuss specifically the chart of POWERGRID. Why POWERGRID? Because lately the market has been very bearish, and during bearish markets, it becomes especially important to take a look at stocks which have been doing bullish. The reason being that retail traders have a tendency of entering stocks after the rally. Even though at EXP Invest, our motto is that we only enter stocks before the rally, I thought it would be a good opportunity to take a stock where rally has been pretty consistent over the last few weeks and analyze and tell people whether it's a good idea to enter the stock right now, to have active positions, whether it is a good time to hold on to that position or should they exit. So without much delay, let's move towards the chart of POWERGRID. It's not going to be a very time-taking analysis, but as soon as it is done, I promise I will help you out with your question and answers. So make sure that you mention the positions where you're stuck right now with the cost price in the comment section so that as soon as I'm done with the analysis of POWERGRID chart, I will be able to analyze your stocks on the charts and help you out with your positions. So this is the POWERGRID chart, and to begin our analysis, we will start with the largest time frame and then we will keep moving downwards. So this is the monthly time frame, and as you can see the analysis, the chart, the way the chart is unfolding, it suggests that the uptrend is quite strong. There were two instances where the stock had given strong downward spikes, which was in 2008 and 2020, which shows that the stock actually has a pretty dominant uptrend unfolding. And when even the entire market was very negative, the 2008 crisis is unknown to nobody, neither is the 2020 crash, right? During these two times, this stock reacted but recovered very fast. What happened after that? We can see that the stock also has a tendency of giving a really fast recovery. What is the extent of that recovery? We see 90% recovery from the 2008 low. We see a 140% recovery in a matter of around 3 to 4 years, right? And then we see another 128% recovery or rally in again a matter of 3 years. So what we understand from this in the stock of POWERGRID is that firstly, it's a very, very slow moving stock especially when we think about the small cap and the mid cap rally, because those stocks usually give a much faster move, right? So POWERGRID, being a big stock, it's also a really, really slow moving stock. Okay. When it goes downside, how much downside does it give us? It gives us up to a 40% downside with a good 30% correction. Here again, we see a 25% correction, a small 20% correction. So the stock basically has a tendency of going maybe 90 to say 140% up and then gives a downside of 30 to 40%. Okay. With that concept in mind, let's go one time frame lower to the weekly time frame. Are not very different from the last 100 days average volume. Okay, the volume MACD histogram that you're seeing here is set up in such a way that it takes into consideration the 100 days activity even when we are looking at the weekly time frame. Okay, moving on to the daily time frame, we again see that the volume has been picking up when the price is going upward. We can see that the volume, the green bars on the histogram, what they tell us basically is that the 20-day average of the volume is the fast line and the 100-day is taken as the slow line. So whenever it is green, it means that the 20-day average of the volumes is above the 100-day average of the volume, right? And how much higher is also shown in the histogram. We don't really care so much about the how much, we only care that it is above and by what extent relatively, right? Not exactly, but relatively. The word relative is very important. But there is one very important thing that the daily chart is telling us in the analysis of power grid. That is the presence of a key resistance trend line. So we've already established that power grid is not a super bullish stock, even though it is one of the very popular stocks. In the live sessions that I do, I get repeated requests for the analysis of this particular stock, right? Now, what I'm also seeing is that power grid is above all the key moving averages that are there, the 200, the 100, the 50, the 20, right? This again is very bullish. And again, uh, while it is also bullish, it also suggests one very important point that now is not a very good time to make a fresh entry in the stock of power grid. Firstly, the stock is far away from all its key means, that is the exponential moving averages. Secondly, the stock is very close to a resistance trend line. Why is this resistance trend line so important? Because last time when the stock touched this resistance trend line, it gave a strong correction. How much? It gave a nearly 23% correction from there. So taking a fresh entry at this point of time is a really bad idea. Let's move on one more step lower to the 75-minute time frame. Okay. Now what we see is that the price ever since this decline happened. So first of all, this decline that had happened here, we can see it happened on high volumes. Okay. And ever since then, whenever there is a decline in price, we can also see a slight uptick in the volume in the compared to the last 100 days volume. Okay. And what does that tell us? What that tells us is the price. So when the price declines and the volume increases, that indicates continuation of weakness in the prices. Now, recently we did see an uptick on the upside, but that stopped as soon as the resistance level was reached. And now, since the price is even going sideways, the volume has been on the decline. Not only this, if you also look at the RSI has been overbought on the 75-minute time frame for a long time now. If that was not enough, when we look at the 15-minute time frame, we can see clearly the signs of a negative range shift. What does negative range shift mean? Negative range shift means that the momentum in RSI or the momentum in the stock of power grid in the near term has started shifting towards slower and indicates that the price may go into correction in a very may go into correction very soon. Today, especially the kind of movement that the stock has given, going down to the 3-minute time frame, the kind of movement that the stock has given today has clearly established the level of 200 as a key resistance in the stock, because it approached the level of 200 twice but was not able to breach it on the upside. However, for a more swing trading kind of profile, because I am predominantly a swing trader, so all my analysis pertains to swing trading only, I would look at the level of 202 or 203 as a more important resistance. On the downside, if you are someone who is holding the stock of power grid, then it is very important to maintain the stop loss at the level of, so the first level of stop loss should have been triggered for you today itself. But if you're still holding on to the stock, then please remember that the 75-minute time frames, 200 EMA lies at the 192 level. Okay, so your stop loss should ideally be a little bit below that, which means around 191 or even 190.5 is where your stop loss should be. And as far as the target is concerned, you should maintain the target at the level of 206, which means your target from the current price of power grid is at the level of nearly 205, and your stop loss is also 192, which means your risk reward ratio is 1:1 because the stop loss and your target both are 3.5% away. Now, this is another reason why I will strongly recommend you not to take a long position in this stock right now, because when you're doing swing trading, if you want to be consistently successful, maintaining a high risk to reward ratio in all your new trade setup is very important. And in my Trade Together program, I only give stock recommendation to my clients where the risk reward ratio is always minimum 3, with a holding period of around 2 weeks to it can go up to three months, right? The risk profile that we approach is minimum 5% to up to 40% because we are doing short term trading here, or rather medium term trading here. So that is a pretty good profile or return profile to pursue as long as the risk return is 3. That is, per unit of